Hello, fellow traders. 'Tis I, TheRumpledOne. It's Tuesday, June the 18th, the year 2019. Let's talk trading. Timing. Yesterday we talked about trading and timing. Timing is everything, right? Or is it? If you get in too late, you might miss the opportunity. If you're not there, you might have missed that opportunity to take profit. So timing does play a role, but is there some way you can minimize the role it plays? I mean, at one point in time, price hits a certain level, it's going up. And if you're long, you go long, you can take profit. But if that price hits that same level at a different time and price is going down, but you go long, now you're looking at drawdown, possibly getting stopped out because we know you've got a stop in place. So many times you'll put the trade in, it'll go up, you'll move your stop, and then it'll hit your stop and then continue to go your way, and you leave pips on the table. And had you waited, maybe if you weren't even there to watch, it would have worked out your way. So let's just see what we can look at timing, analyze it, and maybe you'll pick up maybe just one little tip or something where you can increase your profitability. And if timing's wrong, yes, you lose, but that's why we have your risk and money management in place and your method in place, and you execute flawlessly and you have a flawless performance. And of course, on the money and risk management side, once again, there's nothing to worry about timing here, because the time to put your stop loss on is when you enter the trade. You enter a trade with your stop loss in place. Timing. Well, let's see. The timing on a weekly gap is you only have a certain amount of time to get in that trade usually. But in this case, you see we still have one pair that hasn't filled that gap. I believe yesterday it was 2 or 3. Timing, you see here, we almost took out that weekly pivot. We only missed it by, I think, just a couple of pips here. Actually, here it says high was 0.12. For some strange reason, I can't get that dot to show. So maybe what I need to do here, so you guys can see how to do it. Here, we'll go to the TRO mid dots. And we will show the box here. Show box true. We've got the pivot showing. And so it was 0.129. So we missed it by about a pip. I think we mentioned that yesterday. So timing here, small wick zone on the week, but it did enter because the price was up here yesterday. It did enter and then it reversed. So you had some time to get in that trade. And here you see we closed below the previous daily candles midpoint. We opened below, that was yesterday, then we closed below the previous candle. Here we opened below the previous days. Here we closed below the previous days. That's signaling a negative bias or a short bias. And you see what happened. So once again, you see here price came up to the midpoint, but then failed to cross over and it came back down. So for the month, we're still positive by 55 pips, but you see we've turned negative on the week. Now, We are back into the opening range of that first day. You see here. So there is a long trigger at 121.64 to go long out of here, and we can look to go short at 120.78. Because you can see here that monthly wick, we've only got about a 6-pip wick here to the downside. So it's possible to get more downside if it breaks here. So on timing, you see you've got a long time to wait for that trigger to happen. And of course, there'll be many trades before that happens. Now, just looking at the first trading day of the month opens, you can see here we are above June's open. But you can see here we're now within that first day of the month range. We showed that earlier, and you can see we're 25 pips off the high and 61 pips off the low right here. But we're outside of all the other ranges. That inside bar trade was 16 bars ago now, and you can see where we are. And today's not going to be an inside bar. But you see here we've got a bunch more inside bar trade possibilities here. And just noticing price, you can see dollar Swiss franc is almost at par, 5 pips above. Now we've got 5 pairs over 100 on the range. So it looks like volatility picked up. Not sure why. Maybe it had to do with that power outage in Argentina yesterday. I don't know if you're aware of that. But those of you who look at my other videos know I'm a prepper. So I'm usually in tune with the disasters and catastrophes around the world to prepare for those eventualities. And I hope you guys as traders also prepare for the eventualities, the possible disasters, that could be any size, personal or worldwide, and anywhere in between. But this is trading, so we can see here we went through the previous day's wick zone, lower wick zone, right out of it. And there was about 50 pips to be had if you nailed that low. Not a bad trade. Once again, timing, simple, just following the daily candle color at the line. With the multimeter for the candle color, it's just real simple. You don't have to flip through all these charts. You can just look here. And in this version, it tells you how many bars in a row you have that color. So you can see here we've got 1 in a row today on the daily, 2 in a row on the weekly. So these can help you in your trading. Holo trades right here on the H1 lowest open. You see you had a couple of opportunities a few hours ago to pick those up. I hope some of you got in those trades because they were good for about 40, 50 pips right here if you nailed it. And you can see here the highest open of the day happened, 1, 2, 3, 4, 5 hours into the day. On the buy zone, pivot was within the buy zone, so basically no bias. So you can see here we took out the pivot. There's a couple of buy zone entries which probably triggered you to stop out. Now you're not going to win them all, but here then if you stopped and reversed and went short, they paid off nicely. And here gave you a second entry. This big bar right here, remember, big bars, there's usually a chance that price will return to that level. I think I did that indicator, showed you that indicator return. I don't know if I ever released that one, tell you the truth. I don't remember if I really liked it enough or if I did enough study on it. But it was just an observation. If you see a big bar, usually price will return to its open. So you see the one, so price returned, but we got another big bar, and you can see price tried to return to this open level right here. But that's just an observation. But that big bar indicator that I put out there, once it returned it erases the line, and you don't see very many lines. So I think there's probably something to it. The weekly open cross, I mentioned earlier this week how it can be a very profitable trade after the first day, and you can see here what happened once and what happened again. And this movement from here to here, this shows you why you have to take profit. I talk about timing. Once again, you can be up 50 pips and then in a blink of an eye, you could be down 50 pips. I've seen it happen. I've been on the plus side. Oh God, I can't remember how long ago it was, but it's when the Swiss bank, I forget what they call it, but they did something and it shot the currency down 500 pips. I just happened to be short. It was so sweet. It was so sweet. But you can't count on those, but you can't discount them, when those black swan events. So timing, move your stop, put things in place, but sometimes things move faster. Don't be greedy, all those things. But you can see here, these wicks, price going in and out of these wick zones, it's telling you, you know what? It's not making newer lows. So somewhere right along here, if you were in this trade and then price came back a little, but then went down, but then it came back the other way, this is your indication right here. It's time to take profit off the table. And sure, you might be thinking, oh, it could go further, but look, if you entered here and it came back here, it might have just stopped out on you. You wouldn't be too happy about that. So especially for you overnight traders, where you put your trade on, you might have a stop loss, but you don't have a TP, you can see how much profit you would have missed out on. So timing, maybe you entered a trade, but say you trade a full mini lot, okay, 0.1 lot. Well, maybe instead you trade a couple of 0.05s. And so maybe one trade you put a TP, the other trade you put a trailing stop on, and it works out to your favor. Just things you have to consider because you're not going to be at the screen 24/7, right? And you can see here the green rats feasted very well. And you see we already hit the monthly pivot. We hit that weekly pivot just about. We only missed it by about a pip. So price got near the pivot and then it got rejected. So you have to remember, and once it gets by the pivot, it's probably going to go one way or the other. Like you didn't know that. You don't really need me to tell you that. But it's just something to observe and say, hey, they're taking it away, or hey, they're going back towards. So here, they hit the monthly pivot earlier and then they took it back away. So, timing is everything, but you can also put it on your side. So, fellow traders, just remember that it's not what you trade, it's how you trade it. So, go out there and drain the banks.